Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Monday, July 8, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, the market continues in the melt-up mode situation, poking their head above to make another new high today. However, the question is she running out of steam? Should there be some kind of a garden variety pullback situation sooner than later? Let's say there is, for argument's sake. Where is the first place that they go down to pay a visit or revisit to double check where a place that they just broke out from? We'll call it 550.12. It could be 550. It could be 550 and a quarter. It could be a spike below 550. A, there's a semi-fat round number. B, it's the most recent breakout area in the sequence. The market ran up to this point here, had a slight pullback, took them several days, little over a trading week and a half or so to get through that area that qualifies / constitutes the most recent breakout area. Big semi-fat round number, around 550, give or take. They will be back to pay a visit. It's not that far away. It's just the concept of how Mrs. Market works day in and day out. Doesn't guarantee she comes back down there tomorrow. It just says, hey, there's going to be another pullback like there always is. And when there is, this is the first place that they're going to A, pay a visit to, B, likely find some minimum of intraday support, and C, if she gets below, it opens the door for another leg down, where inside the number members and certainly live room members will have those specific numbers and the commentary accordingly. What else do we have on the docket this week? Well, the market can get, and I repeat, can get rather volatile this week. How so? We've got a couple, three things on the docket. We have Jerry's testimony in front of Congress. Jerome Powell will be testifying in front of the Senate Banking Committee, the House Financial Services Committee. It's, I believe, a semi-annual report. They're going to grill him, the folks on Capitol Hill that really don't know what they're talking about for the most part will issue questions provided by their staff members. They certainly won't understand the answer. Jerry will go on for several hours after taking a small handful of Xanax. He'll answer the questions. The market can certainly interpret things one way or the other. Some algorithms could pick up some of Jerry's comments, whip the market around a little bit. In the end, is he really going to surprise the market in front of the Senate Banking Committee and the Financial Services Committee in Congress? Is he going to say a lot different than he said in the last comments after the FOMC meeting? Probably not. Food for thought. What else do we have on the docket this week? We have the CPI, PPI alphabet shuffle. I believe Wednesday is the CPI, Thursday's the PPI. The Fed pays attention to these numbers, also paying attention to what's called core CPI. What does that include? Well, it doesn't include anything different. It excludes the things we use the most, like food and energy. Go figure. Nevertheless, the market likes to hang on those numbers at the 8:30 a.m. data dump before the market opens, whip it around a little bit, pick a direction, and go. So that's what we have on the docket this week. There should be some increase in volatility this week. Do we find anything new on the weekly chart? Well, they had a nice, big, healthy up week last week. And what we do notice is they're getting, once again, a little bit extended from where? Home base. Doesn't mean they can't go higher, but whenever she gets a little bit extended from home base, what's home base? The 20-period moving average or the red sloping trend line. Whenever she gets a little bit far from home base, as you can see in the past, she kind of snaps back toward home base. That doesn't necessarily change the trend. It just keeps her tethered to the uptrend without running too far too fast. Tethered is a technical term. Back to the daily chart. Let's keep in mind, you see today's candle. The high was 556 and a quarter. The low was 554.19. Very narrow range for the entire trading day. As you can see, as evidenced by the rest of the candles, some days are very narrow. This was one of them. Not uncommon for a Monday within the summer doldrums in the midst of a melt-up situation. Garden variety stuff. Speaking of intraday, we had some numbers today. We did have a trade or two today in the live room inside the numbers. Let's see what we've got. In fact, if you're a participant in the live room and you participated in today's activities, make a post under the video. Help a brother out. Who's the brother? It's not me. It's all the other traders out there. We help each other out. If you find that this place inside the numbers, the live room, My Strategic Forecast, me, for example, is helpful in understanding and learning how the market works, and by the way, how to make money from learning how the market works, then post a comment under the video. Help a brother out. It was quiet this morning, but we do have some numbers on the board. We were focused in a support area or support number at 554.10 is the first place of support, and if below there was another number, never got below, but that was the number that I had my eye on starting at 0:30 this morning. Right of the vertical is today's activity. Here's a SPY 5-minute chart. 554.10 was the number. And as you can see, they tried twice today, once in the around lunchtime session, part of the day, and the second in the afternoon. They tried to come down and hit that number, came up a few pennies short both times. Summer doldrum, narrow ranging, quiet tape, low participation, low volume is what we had today. As the morning grows on, we have more commentary. What I urge you to do is pause the video, read the notes, go back to the chart, and double check the work. 9:21, 9 minutes before the opening bell. 5:56, give or take, is the next round number situation. We can't call it big and fat, but at new highs, they will typically react there for at least a little pullback situation. Those traders looking for a scalp short can consider if they do it sooner than later, meaning get to 556. We had participation in the live room. 556 was the resistance. They got above it by a few pennies, making a high of 556.25. Came down all the way almost to the support area. Technically, that was essentially the trade. We had pretty decent participation in the live room. At least we were able to get a morning trade under our belt. We were certainly looking to buy the 554.10 area, but they never got there. If anybody front ran it, that was up to them. Nevertheless, we did get the short opportunity. And then the short began to morph into something else. This is the hourly chart, and let me blow it up a little bit so you can see what I told traders in the live room. We had this discussion. They put in a sign or signal of a trend change. Where do you get this from? Right out of the course, Lazy E-mini Trader. So what can you do with that? You can trade it against the high. What does that mean? It means you have to have something to trade against when you're taking a trade. You have to know where it's wrong. At new highs, whenever they put in a sign or signal of a trend change, the high of that candle is the eventual wrong area. So if they were to continue up and hourly close above 556.25, the high of that candle, that would have constituted the trade was wrong, and we would have had to exit the position. However, we were able to stay in. Any trader that stayed in for the day trade, if you will, were able to get close to our eventual target down at 554.10. We take profit along the way. We certainly were able to turn it into, rather quickly, a risk-free, emotionless trade. Wasn't fast, wasn't sexy, but it was a moneymaker, and nonetheless. Here's what a 15-minute chart looked like. They put in the top, they dripped lower. It was a stress-free, risk-free, emotionless trade after the first profit area was taken. How you doing? Pause the video. Everything was given to you before the opening bell. Read the notes, go back to the chart, and then double check the work. 940, they're simply finding resistance at 556, give or take, as prescribed. Pause them, read them, double check the work. It's all in here each and every day, everything you need from a support perspective, resistance perspective. What's the big picture? What's the small picture? Where are the trades? If you're active in the S&P, SPY, ES, the E-mini futures contract, the micro contract, the exchange-traded funds, the options on the exchange-traded funds, options on XPX, options on SPY, any of those things work. We have traders that trade any and all of those vehicles. How about a live room trade right here in Tesla? Now, we had some traders take it, we had others didn't, because in all fairness, they kind of took the luster off this number, and what I said in the live room was 245.14 is the number, but they kind of took the luster off it when they bounced a couple of bucks here in the second 5-minute candle of the day. It came down anyway. We did have traders that played this in Tesla. Some used options on one of the Tesla derivatives, the leveraged exchange-traded products. Either way, we had money made in Tesla today, or should I say Tesla. What's going on over in Camp IWM? My favorite market-leading indicator. They had a nice up day, up at the end, about 0.7%, leading the charge around the other indices. However, into the convergence of the 150-period moving average. Now, these moving averages have been sliced and diced over the last few days, so they don't really hold that much importance from a trading perspective. However, they're still a guideline, they're still moving averages, and price is still below until it's not. They are still in the middle of this triangular situation going on, and what we're going to say is clearing this breakdown candle high at 203.82, frees them up a little bit to get to this pivot high here, and then work their way toward the upper portion of this channel, if you will, the upper trend line. At any point, they break the lower trend line or they break the upper trend line, it will be a breakout or breakdown situation. In between, they're simply trading in between. Now, that's not to say there are or are not trades in between. There can be, there are. We're just giving you the big picture, at least if they stay inside of this channel, if you will. They just go back and forth until or unless they break out or break down. What about the folks down at the transportation department? Not a day like the IWM had. My second favorite market leading indicator in the opposite direction, down about 0.8%, 120 points today. My number one favorite canary in the coal mine. Write this down, put it on a sticky note. 14,900, give or take a few points on either side, is an area that A, will be magnetic, and B, should be garden variety of chart support, at least from an intraday perspective. We'll call it 14.9. Maybe it's a spike of 14.9. Maybe they come up short by a few dollars. But nevertheless, that is an area. A is a target if they continue down. B is support, at least short term. You have lower highs. You have a high. You have a lower high. You have another lower high in the transportation department, people. But when you stretch out the chart, you also have a low, a higher low, a higher low, and you have a very similar situation that you have in IWM. You have one of these triangle situations that's getting pinched together, and once they get to the apex of the triangle, they are out of time. They don't have to wait until the end. Once they break out above, that's a breakout. Breakdown below is a breakdown. One of those two things will happen either before or at the point in which they get to the apex. Write that down. Put it on a sticky note. What about the Q people? Anything wrong with the Qs? Absolutely not. Up a buck today, 0.25%. Another new high. They're just grinding higher, but they are getting, just like the S&P, a little bit extended from what? Home base. Home base is what? The 20-period moving average. Doesn't mean they can't go higher. They can. What's above? 500. Is it that far away? Absolutely not. Sometimes they come up short. Other times they spike them through. They will want to get to, at some point, 500, or at least make an attempt at 500. They've gotten pretty close thus far. It's a really, really big really, really fat, really, really round number. 500. If they turn around and have a little bit of a pullback situation, where do they go to? The most recent breakout area. Where do you find that? Right here. That's where they'll be coming down to pay a visit at some point sooner than later. Can they get to 500 first, 501, 502, then turn around? Absolutely. Can they turn around before 500? Absolutely. Anything doing in the financials? Above all the moving averages, the trend is your friend. Down a touch today, 0.25%. We're not going to make a federal case out of that. They can be somewhat volatile around Jerry's comments this week. Certainly around the CPI, PPI data, because that'll drive what the Fed's going to do in terms of interest rates, or at least what the people think the Fed is going to do around interest rates, and therefore the market can get a little whippy, and therefore the financials can get exponentially whippy because they're exponentially sensitive to interest rates. How do you like them apples? About Smashmouth, the Philadelphia Semiconductor Index. Anything going on here? Above all the moving averages, trend is your friend. They made a high, came in to retest the moving averages, breaking back up, not at new highs, which is interesting. Other stuff's at new highs. S&P's at new highs. NASDAQ's at new highs. The semiconductor space is not at new highs. Is that a tell? I'm watching it pretty closely. We have a big breakdown candle, but we're already back climbing the candle. We're not at the top, but they're making an attempt near the top. This is a melt-up situation. When you flip over to the weekly chart, you could see they did pull back, but all in all, this isn't much of a pullback from a weekly chart or a monthly chart perspective. This is in a very strong uptrend, and it will come to an end. It's just a matter of where. 300, 290, 285, 280. We don't know where it's going to come to an end, but we know that it will when they get extended just like this from the 20 period, in this case monthly moving average. That's a big number. That's far away. They will come back. We just don't know from where and when it will start. All in all, when there's nothing wrong with the semis, there's nothing wrong with the overall tech space as general rule. Semis get weak. You start to look at some weakness in the Qs and other spaces around the NASDAQ composite, if you will. Right now, up $4.50 today. Nothing wrong with Smashmouth. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.